Hey everyone, and welcome back to Investing Talk podcast. We've got a really interesting stock on our radar today.
Oh, yeah.
Naas Technology,
Okay.
ticker symbol NAAS. This one is making waves after a $10 million share repurchase announcement sent the price skyrocketing. We're
Wow.
talking almost 100% gains in pre-market trading alone.
Really?
What's really interesting is this stock had been down 90% from its peak, so this sudden surge is definitely raising eyebrows.
Yeah, it's certainly a bold move, especially in the current market climate where tech stocks have been experiencing a lot of volatility. Share buybacks are usually seen as a positive signal, a sign that the company believes its stock is undervalued and has confidence in its future prospects.
So let's dive into the details. What can you tell us about this share repurchase program and what it might mean for investors?
Well, a share buyback essentially reduces the number of outstanding shares in the market. This can potentially increase the value of each remaining share as earnings are now distributed among fewer shares. It can also boost earnings per share, making the company look more profitable to investors. It's interesting to note that this buyback comes on the heels of Nas's strong Q3 24 earnings report.
I was just about to ask about that. I know they had a good quarter, but what were some of the key highlights that stood out to you?
They achieved non-IFRS net profit, which is a big deal for a company that's been working towards profitability. They also saw significant revenue growth, hit a record gross margin, and managed to reduce operational losses. These are all very positive signs, especially for investors looking for companies with solid fundamentals.
And it seems like they're operating in a really promising market.
Absolutely. The electric vehicle charging market in China is booming right now. The government is heavily investing in EV infrastructure, and consumer demand is growing rapidly. Naas, with its extensive charging network, is well positioned to capitalize on this trend.
I read that their network already covers over 50% of Chinese cities. That's a huge footprint. Do we know how they stack up against the competition?
That's a key question. While they do have extensive coverage, the EV charging market in China is becoming increasingly competitive. There are several other major players, each with their own strengths and strategies. One of the things that sets Naas apart is their focus on AI-driven efficiency. They're using technology to optimize charging speeds, manage energy consumption, and even predict demand patterns.
That's interesting. It sounds like they're leveraging technology to gain a competitive edge. But with all this talk about the booming EV market, we also have to consider the risks involved.
Of course, investing in any company, especially one in a rapidly evolving industry like this, carries inherent risks. One specific concern with Moz is the stock's thin liquidity. This means there aren't a lot of shares readily available for trading, which can lead to exaggerated price swings both up and down.
So those impressive gains we saw today could be wiped out just as quickly.
That's a possibility, and it's something investors need to be aware of. The stock has a history of volatility, having experienced significant drops in the past. This recent surge, while exciting, needs to be viewed within that context.
That's a good point. And what about execution risks? Can Nas actually deliver on their ambitious plans to expand their network and maintain this positive trajectory?
That's another critical factor to consider. They've laid out an aggressive growth strategy, but achieving it requires flawless execution. Any missteps, delays, or cost overruns could impact their profitability and hurt investor confidence.
So it's not just about having a great plan, it's about being able to execute it effectively. And on top of that, they're operating in a complex geopolitical environment. Trade tensions between China and the U.S. are always a concern.
Absolutely. Even though NAS primarily operates within the Chinese market, any escalation in trade disputes or the imposition of new tariffs could impact their supply chains, increase costs, and hurt their bottom line. It's a risk that can't be ignored.
So we've got this interesting mix of positive news and potential risks. The share buyback, strong earnings, and booming EV market are certainly encouraging. But thin liquidity, execution challenges, and potential trade tensions paint a more cautious picture. How should investors weigh these competing forces? What should they be looking at to make an informed decision?
That's where we'll pick things up after a quick break. We'll dig into the technical analysis of NAAS, explore different investor perspectives, and provide some key takeaways to help you navigate this complex investment landscape.
Welcome back to Investing Talk podcast. We're continuing our look at Naas Technology, ticker symbol NAAS, and trying to make sense of this company's wild ride. Before the break, we talked about their impressive performance, but also some of the risks lurking beneath the surface.
It's important to look at both sides of the coin. The potential is there, no doubt, but understanding the risks is crucial before making any investment decisions.
Exactly. And speaking of understanding, let's talk about the technicals for a bit. I know charts can sometimes seem like a foreign language, but they can offer valuable insights into a stock's price movements. What are the charts telling us about NAAS?
Well, the stock has broken through its 50-day moving average with high volume, which is generally considered a bullish signal. It suggests strong momentum and buying interest. However, it's also important to note that the Relative Strength Index, RSI, a momentum oscillator, indicates the stock is currently in overbought territory.
Okay, so for those of us who don't speak chart, could you unpack that a bit? What does it mean for the stock to be overbought?
Simply put, it means the stock price has risen rapidly in a short period and might be due for a correction or a pullback. Think of it like a rubber band that's been stretched too far. It's likely to snap back at some point.
So even with this upward momentum, there's a chance the price could drop.
That's always a possibility, especially with a volatile stock like NAS. Another point to consider is the resistance level we see near the 200-day moving average, which is hovering between $10 and $15. This is a price level where the stock has historically struggled to break through.
So those price points could act as a ceiling, preventing further upward movement.
Precisely. It'll be interesting to see how the stock behaves around those levels. Will it break through with conviction, or will it encounter selling pressure and retreat?
It sounds like there's a lot of uncertainty, which can be nerve-wracking for investors. How should they be thinking about this information? Should they jump on the bandwagon now or wait for the dust to settle?
That's the million-dollar question, isn't it? And unfortunately, there's no easy answer. It really depends on their individual risk tolerance investment goals and time horizon.
Okay, let's break it down for different types of investors. What would you say to someone who's a bit more aggressive, maybe someone who thrives on volatility and is looking for quick gains?
For the aggressive trader, this kind of volatility can actually be enticing. They might see this recent surge as an opportunity to ride the wave buying on dips near $10 with a tight stop-loss order to limit potential losses. Their target might be somewhere between $12 and $15, looking to capitalize on that short-term momentum.
So essentially, they're playing a high-risk, high-reward game.
Exactly. They're betting on the stock's continued upward movement, but are prepared to exit quickly if things turn sour.
What about someone who's already holding NAS from lower levels? Maybe they bought in when the stock was down?
For those folks, it's a different story. They're already sitting on a nice profit, and this recent surge might be a good opportunity to lock in some of those gains. Remember, profits are only realized when you sell.
Makes sense. It's about taking some money off the table and securing those gains. What about the long-term investors, the ones who are in it for the long haul? What should they be doing?
Patience is key for the long-term investor. They're not as concerned with short-term fluctuations and are more focused on the company's long-term growth prospects. They might hold their position and see how the price action plays out, looking for signs of sustained growth and stability.
So observe, analyze, and then decide.
Exactly. They might want to see if the price stabilizes above those key moving averages we talked about, like the 200-day moving average. And if the trading volume remains strong, these are indications that the rally has legs and isn't just a fleeting surge.
Okay, that makes sense. So different approaches for different investors. But even with all this talk of potential and different strategies, we have to be realistic. NAAS is a risky bet, isn't it?
Absolutely. It's important to acknowledge that, as we discussed earlier, there are several risks associated with this stock, from thin liquidity and volatility to execution challenges and trade tensions. Investors need to weigh these risks carefully before jumping in.
It's like we said at the beginning, high reward potential often comes hand in hand with high risk.
Precisely. And that's where we need to step back and consider the bigger picture.
And that's exactly what we'll do. We'll explore some of the broader factors that could impact Nas's future beyond the immediate news and technical indicators. We'll look at the competitive landscape, technological advancements, and the regulatory environment, all of which play a crucial role in shaping the company's destiny. Welcome back to Investing Talk Podcast. We've been looking at Naas Technology, ticker symbol NAAS, examining their recent surge, their performance, and of course those risks that are always there.
Right.
But let's zoom out from that. What are some of the bigger picture trends that could make or break Naas, even beyond what we've already talked about?
Yeah, that's a crucial question. No company exists in a vacuum. The EV charging market is dynamic and competitive with a lot of moving parts.
So it's not enough for Naas to just ride the EV wave. They've got to be, really paddling hard to stay ahead.
Exactly. One major factor is competition. We touched on this briefly, but it's worth emphasizing. Established players and ambitious startups are all vying for market share in China's EV charging space. Naas has to differentiate itself not just on price, but on technology and the overall user experience.
So what does that look like in practice? What are some of the battlegrounds in this competitive landscape?
Charging speed is a huge one. Consumers want their EVs charged quickly and efficiently.
Right.
Companies are constantly pushing the boundaries of charging technology to reduce those wait times. Nas's focus on AI-driven efficiency could give them an edge here. By optimizing charging speeds based on grid conditions, demand patterns, and even individual vehicle needs.
So it's like a technological arms race, but instead of weapons, they're battling with kilowatts and algorithms.
Exactly. Then there's the whole ecosystem around charging speed. Think about user-friendly apps, payment integration loyalty programs, and even additional services offered at charging stations. Nas needs to create a seamless and enjoyable experience for EV drivers to stand out from the crowd.
Yeah, it's not just about plugging in, it's about the whole customer journey, right? Speaking of journeys, what about expansion? China's EV market is huge, but Naas is already in over 50% of their cities. Where do they go from here?
That's a good question. Continued expansion within China is definitely an option, focusing on densifying their network in existing cities and reaching underserved areas. But they might also consider international expansion targeting other markets with high EV adoption rates.
That would bring a whole new set of challenges, though. Different regulations, consumer preferences, and competitors in each market. Talk about a complex puzzle.
Absolutely. International expansion is not for the faint of heart. It requires careful planning, strategic partnerships, and a deep understanding of the local market dynamics.
And let's not forget about the regulatory landscape. Governments play a huge role in shaping the EV market through subsidies, incentives, infrastructure investments, and emissions targets. Nas's success is very much tied to these policy decisions.
You're hitting the nail on the head. Favorable policies can accelerate EV adoption and create a tailwind for companies like Naas. But any changes or uncertainties in those policies could have a significant impact on their growth trajectory.
So Nas has to be politically savvy, not just technologically advanced.
Without a doubt, they need to build strong relationships with policymakers, anticipate regulatory shifts, and adapt their strategies accordingly.
Okay, so we've got competition, technology, expansion, and regulations all swirling around this company. Is there anything else investors should keep in mind when trying to assess Nas's future prospects?
One final but crucial factor is consumer adoption. While EV sales are growing rapidly, widespread adoption is still dependent on factors like affordability, range anxiety, the availability of charging infrastructure, and even just shifting consumer mindsets.
It's about overcoming those hurdles and making EVs the go-to choice for everyday drivers.
Exactly. Nas's success is ultimately intertwined with how quickly and smoothly consumers embrace electric vehicles. The faster the adoption rate, the greater the demand for charging infrastructure, and the more opportunities for Nas to thrive.
It really highlights the interconnected nature of this whole industry, doesn't it? The company, the technology, the market, the consumers, the government, it's all one big ecosystem.
That's a great way to put it. And for investors, it means taking a holistic view. Look beyond the immediate headlines and try to understand the larger forces at play. Consider the competitive landscape, technological advancements, regulatory environment, and consumer trends, all of which shape the investment landscape.
It's a lot to digest, that's for sure. But I think we've provided our listeners with a solid framework for evaluating Naas Technology and the broader EV charging market.
I hope so. At the end of the day, the decision to invest or not is a personal one. It depends on your individual risk tolerance, investment goals, and belief in the company's long-term potential.
Well said. We've given you the information, the insights, and the different perspectives. Now it's up to you to do your own due diligence and make an informed decision. And as always, we encourage you to do your own research, consult with a financial advisor if needed, and never invest more than you can afford to lose.
Absolutely. Investing is a journey, not a sprint. Stay informed, stay engaged, and enjoy the ride.
And if you enjoyed today's episode of Investing Talk Podcast, be sure to subscribe, share it with your friends, and leave us a comment. We love hearing from our listeners and getting your take on the companies and trends shaping the investment world. Until next time, happy investing, everyone.